Nvidia shares are in correction territory after falling more than 10% from a closing high in early November. Joining us now is John Vinh, KeyBanc equity research analyst. I like the way you approach this, John. It almost reminds me of a Ben Franklin close. You've got everything I could possibly use. You got a bull case. You give me what your bullish fiscal year 26 earnings per share estimate is and what a premium multiple would look like, and then you give me the reasons why. And you've also got a bear case with a lower multiple and a much lower earnings per share estimate. So nobody really knows, and you've given me a lot of reasons for both. What you finally come to, though, is that you're overweight the stock with a price target of 180. Let's go over some of the bull and bear case. The latest earnings was pretty solid, and so was the outlook.
Yeah, that's correct. These guys continue to put up numbers that are above expectations. You see continued upward revisions in estimates. They're on the verge of kind of ramping a new generation product called Blackwell, which is going to give, provide them with kind of a step function uplift in terms of kind of the pricing that they're going to get, and also just the performance in AI trading for their customers.
And you give a lot of good reasons. It's going to continue to outstrip competition for GPUs and AI. If the company were able to earn $5.30, your high-end estimate, and you put 38 times that, you could get to $200, although you've got a 180 price target. Let's talk about the bear case, because no one ever really, we don't hear that much. But if it instead of $5.30, you think the downside possible earnings per share miss would be $3.50, and if you put 29 times on that, you're all the way down to 100. So you can get to a range of 100 to 200 on what's fair value. What goes into the bear case?
Yeah, there's a couple of things that's driving the bear case, and probably a little bit what's driving kind of the more recent pullback that you see in the stock is two things, right? These guys are dominant in terms of their market share in the market. They probably have kind of 85, 90% share. So if you are a customer of Nvidia, you've got two alternatives right now, right? You can buy another merchant solution from, probably the second biggest merchant provider of AI silicon is probably going to be AMD, or you can kind of build your own, like Google has with its TPU. So, I think what's driving some of the recent concerns is Broadcom reported last week. They've got three major customers right now that they're working with to build AI chips, right? It's Google, it's ByteDance in China, and it's Meta. And they put out a SAM forecast of 60 to 90 billion in fiscal 27, which would imply that their AI revenues are going to quadruple in 3 years. So if you kind of do the math, that would imply that is potential share loss at the expense of Nvidia, right? So that would be some of the concerns that's driving kind of the near-term pullback in Nvidia that we're seeing right now.
So you've got the possibility of eventually not being, I guess, the only game in town. But when you take everything into account, you still think it's a good buy here at under $130.
Yes, absolutely. I would say, a couple things, right? One, we're far from being a zero-sum game right now, right? The AI market is growing well north of 100%. It's probably going to grow, 60, 70% in 26. So you've got massive growth in the overall TAM. You've got multiple winners here, including Nvidia, Marvell, and Broadcom are all going to benefit. I think AMD is making some good progress there, but with the launch of Blackwell, this is a pretty big step function up in performance. So we think they're going to maintain pretty dominant share in the merchant market. On the custom AI side, right, where Broadcom and a Marvell are going to come in, obviously they've got big customers who are investing a lot of R&D dollars into building their own AI chips, but there's a little bit of uncertainty there, other than Google right now, and maybe AWS to some extent with Trainium, there's a little bit of uncertainty in terms of whether a hyperscaler or another AI provider can be successful building their own AI chips.